Hello folks, I'm L.A. Little, and this is your daily TA Wrap. Well, we take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened today, and what does it tell us about tomorrow. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. I don't even think it got over a 0 here today. It was cold, still cold. The markets weren't cold. They got a nice big bounce finally. But what does that do for them? You know, does that change things? Is it the same? Dow was up almost 200, 188 points, 15,628.53. We had the S&Ps tack on 21 3/4 at 1773.5. The composite 45.5 higher, 40.57. NDX 42 3/4 at 34.97.5, and the Russell 10.3 higher, 11,003, almost 11,004. Notice the percentage. The percentages were such that the Russell was the laggard. There's a reason for that, and we'll look at that here in a second. And actually, that may be telling us something. So let's consider that. Let's consider what else is going on. We had the dollar down a little bit today, not much. The rest of the boards really didn't get that much going on. The gold and silver were, I think they were slightly up. They were about flat, actually. Bonds were down some today. Let's go over and look at the markets, look at these indexes, and see what do we have here. So let's get the SPX up, and you know, let's set the plate, right? Because today we had ECB, BOE. Neither one of them did anything. They both basically said, hey, you know, everything's fine. We're going to leave things as they are. Draghi, for whatever reason, they had the ECB. This guy's like got the media just wrapped around his fingers, because he's essentially done nothing for 2 years, year and a half at least, and keeps talking about all those big guns that he's got in his bag and how he's going to use them as needed. We'll do whatever it takes. Well, so far he hasn't done anything other than talk about his big bag of goodies that he can use. One of these days, this euro is going to start tanking, and Draghi is going to be left holding the bag. I don't know when it's going to happen, you know, but you can just tell that the markets are going to take him to test at some point. So far, he keeps talking a good show. They keep believing it, and we just kind of merrily go along the lines here. But it's going to be an issue at some point, and it's going to be interesting to see what kind of tools he's got in that big bag of his. Is he another Bernanke, or is he just full of hot air? Okay, so what do we got here? Let's see. So we've been talking about, on the S&Ps, we've been talking about this line in the sand, so to speak, this price point. It was the swing point low. Tomorrow's Friday. You got the employment number next. That swing point low is a swing point low on this time frame and on the weekly. And if it breaks on a weekly basis, it's already broken on a daily basis, you kind of got the 2 to 3 bars carried through, because you actually had the huge bar down to begin with, and then it kind of laid there for 2 days. So you kind of got the 3 bars here that you would expect on a break of a swing point, even though here you really just had the one swing point. But the fact that it broke on the weekly, I believe, is what gave it all the juice. But now you back over it. If you look at this, you know, one of the things you got to ask yourself, you know, you got an employment number tomorrow. You know, it could rock this market higher. And then again, it could just go the other way. And it may do both. But what you have to always kind of ask yourself is, okay, one thing you're always trying to ask is, where's it going, right? Based on what you can tell, what kind of clues it's giving you. But the other thing is, where would you start changing your mind? Because right now, our mind has been that this thing's trying to finish out an ABCD structure to the downside. And now today, you actually have the B point potentially of another nested ABCD structure inside of it. So if I ask myself where's kind of key point on the way up, it would be right in here in this area, right? The bottom of this big wide price spread heavy volume bar on the way down, and the top of this other wide price spread heavy volume bar on the way down as well. The congruence of those, right, that area in between them, should be extremely difficult to get over. And if this thing slices like, you know, hot butter right through these guys and just trades right on up, right, then we know something else is going on, that the pressure that has been seen is no longer there. So at this point we have a pretty good idea of where this thing really should have difficulty on the way back up, and that is the congruence of those two. Today we had it come up, not that much volume, pressing back up there, but you're back over this swing point. If it stays over the swing point tomorrow, this thing could work its way up into here, right, and then kind of come back and then potentially set up a nice little ABCD structure to the top side to try to finally get over it. That's the bullish case, right, if it can do that. The bearish case is the one we've been watching. In that situation is this larger ABCD structure that's been in place and is still in place, hasn't fulfilled yet. And now that you've got another potential ABCD starting to form, right, depending on how far this thing goes, you could see these two starting to come down right about the same area. You know, it's not exact, but it's down in that same area. And it's going to be down around 1722 to about 1710 is kind of where those areas are. Right now 1722 on the large one, and depending on where this one goes, it could be a little bit lower, but it's right in the same area. So is it one, is it the other? Well, the S&P really isn't telling us which one it is, right? There's nothing here that tells me which one. If I try to say, okay, is it good or bad today? Well, certainly it was good. It got back into this bar, and that's what it needed to do, but it's got some serious problems coming up, and so that one's not going to be the one that tells us. Dow Jones isn't going to tell us. That one's down the most. If I go over and look at the NDX, NDX actually failed today on a swing point low it was trying to get back into. So 34.99.37. They closed at 34.97.60. So you come back into this guy, right? You push into it, you close underneath it, and you have lighter volume. So if I mark it up here so you can see it, what I'm talking about is this low. You push into the low, right? You get over it, you come back down underneath it. You close, you have lower volume. That's a failure, right? That's a big F. Now, it can go back and test again. Yeah, it can get back over it, but right now that's a test failure back into this bar. Now, that's not a huge failure in my mind because you'd already retested and did the retest regen into the bar. So we're not talking about a retest regen here. In other words, we're not talking about this being the retest regen area anymore because we've already tested it. Once you test it, it's done, right? Then you start looking for other things. So the fact that you come back into that low, though, and you can't get the juice to get over it, says, okay, raise your eyebrows a little bit, you know, something's going on. So NDX, yeah, it's kind of saying the opposite of what the S&P's just told us. If I go over to the NASDAQ composite, the broader composite, it can't even get up there. Okay? It's not up there, hasn't got up there. It's still dealing with a Fed bar back here. The top of that was 40.70. We got up to 40.64. Can't quite get into it yet. If we go over to our canary, which has been the Russell, and we look at the Russell. Now the Russell has been probably the best indicator for quite a while and still is. You've got a retest regen going on right now on these two swing point lows. This top, it's trying to get over them. And what does it do? And it's not as if these markets, you know, don't pay attention to these numbers. Somehow they pay attention to it, folks. Top of this guy is 1107.70. Top of this one, 1107.18. Top of today, 1107.44. So you get right in between the two of them. Where do you close? 1103.93. And that's with all the other indexes pushing up with big days up. This guy was lagging. What's he pushing up with? He's pushing up with 382 into 330 into 310. Oh, that looks good, right? Oh, wait. What did he break with? 472. So you're coming up with about 3/4 as much volume as you did on the breakdown, and you're doing the retest regen. You got to the other side. Now, it's a fast one. It came back immediately, right? We came back in here and tested it once before. Now we're testing it again. That's the good news, right? Because if you test within 6 bars, it's just a little bit more in a coin flip. But this guy is the one that keeps telling us to watch him, right? Because he's telling us the most, and right now he's still telling us that this thing's going to try to go back the other way. Not conclusively, but you know, there's enough there to give me pause. So the Russell still is telling us to be cautious. Matter of fact, the NDX is telling us to be cautious to some degree, right? SPX back over those swing point lows, good. This is over the swing point lows as well. That's also good. So we've got some decent good and we got some so-so bad, right? So it really comes down to tomorrow. And if you're not reasonably flat going in, you're kind of throwing the coin here, because I don't know how it's going to break tomorrow. These indexes aren't telling me. Now, if we stay on a short-term basis with the trend, it's fairly clear what the trend is on a short-term time frame, right? The trend is down. It's also clear that we've stretched quite a ways already. This one actually finished up an ABCD structure already. Would have been to here, back up to there, and down. That one actually finished, I think it finished yesterday. And I'd have to do the numbers again, but I'm pretty sure it did. So this one has finished what it needed to do, got a hammer reversal, got a push up today, got stuck on these 2 bars up here in terms of resistance. This one has to get over it to give us confidence that something's happening, and that SPX needs to get back over that area we were just looking at, and then that would tell us we got something more going on. Now, one last thought here. When you break, or at least you push into, and I'm going to bring over the weekly now, when you push into a swing point as we did on the SPX, and you're pushing pretty decent volume, and it looks like we're going to have as much as we had before, right? Because tomorrow we should get decent volume. Here we had 194. We've already pushed 166. Divide that by 4. That's roughly 4 more, right? So that'd be about 200 into the 194. So you're going to push probably more volume. When you push more volume, that changes, right? That changes things to some sort of a consolidation, right, in this area now. In other words, some sort of a range trade. And it also says that, and the reason it says that is that when you hit this thing and you hit it with more volume or about as much, you're probably going to come back and test it again. And so the idea is that this area is going to see some further test as we get out here in time, given the volume. So the best case is that you do close over it and you test some more. The worst case, of course, is you break it and then you get 2 to 3 bars follow through to the downside. So either way, it looks to me like the downside isn't done in these indexes. And if let me see what the Russell's volume looks like, because it's also doing the same thing. And yeah, and this one already has it. So the Russell clearly is going to have more volume. So that tells me that even if this does work its way back up, we're probably not done, right? We're probably in some sort of a range, and we'll probably test again back to the downside down here. Okay, so that's a long-winded where are we. I thought it was important to try to put it into context, because I know tomorrow these numbers are going to print. It's probably going to move big one way or the other, and especially if it moves to the upside. What does that mean? Does that mean you just like jump on the bandwagon and go for it? Let's look at the S&P one more time, and then I'll leave this alone. And that is that assume we gap up tomorrow, right? Just assume this thing takes and it gaps up here, and it's, you know, it's trading up here somewhere. You know, do you jump in and buy it? Well, what did I just say? There's all this resistance right up here. I think tomorrow, if you see, and I think there's a decent chance of this, if you see this gap up here, you might be getting yourself one of those bull trap setups, right, where they force them in so they can take them back the other way, right? So it's a bull trap going the other way. So you come up here, and then you're left holding the bag, and you come all the way back down here, and you do it all again. So I'd be very careful about buying a gap up in the morning. And just common sense says your risk reward doesn't look so good, right, given what you're coming back into. Now, you know, if it gaps up over this, I guess I could feel different about it, but I don't think it's going to gap that far. All right, I looked through most of the sectors. I didn't see all that much in the sectors to tell me anything different. We can pop through them right quick. IYT gets a bounce, no volume. SMHs, same sort of scenario, get a bounce. They don't have all that much volume coming back. A lot of these, you know, the breakdown bar from 3 days back, that's going to be the bar everybody's dealing with now. So the Monday bar, which is February 3rd, almost all of them are going to have, you know, some serious resistance up at that area. If we look at the XLB, XLB pops up again, coming right back into that same bar. XLI didn't get that much of a push, but it is coming back into that bar. Some of these bars, as you can see on this one, for example, you know, some of them you have congruence, you know, and some of them you actually have overlap. This one has the overlap, and actually the draw is there. So you've got an overlap between this bar and this bar, and that's the, you know, the big downdraft bars. When they have the overlap, you know, that's the area, you know, between the high of the Monday bar and the low of the bar before. It's the intersection of those. When you don't have the overlap, it's just the congruence, the difference between them. If we look at, let me see, that's XLI. Let's go to the XLF. XLF is pushing right back up into it now. It's going to hit in there tomorrow. It's going to try to hit in there tomorrow. XLK, same sort of thing. You see it, every one of them's got the same thing. I saw a lot of money moving back into these today. Yeah, not that much. Doesn't look that much. Discretionary got a big bounce today. I'm not sure what was driving it other than the fact it was oversold. Discretionary left a big volume at the bottom. So I would think that is going to get tested again. And it also pressed on a weekly. I'm glancing at the weekly. It also pressed into, on this bar, it pressed into the lows on a weekly, testing a swing point low with volume. But right now, almost all of them are at a point, you know, where they're not going to break on the weeklies yet. And so if you think about it from a trend perspective, the weeklies are still holding. They need to reset. They're all extended. It's not clear if they're going to reset now or if it's going to be later. That's XLY. Okay, let's go over and look at the bonds. Bonds, another big factor here, because the bonds are really the same trade, just the opposite direction. Bonds left volume at the top. They're coming back, no volume. So as they pull back here, you can see the volumes are just, you know, decreasing, especially today's. This low down here, you know, it's into this bar now, just barely. But, you know, again, it doesn't tell us anything, because we could certainly come down and test this low now, or you know, this could be it, and you're back up doing those ABCDs things, right, that it's been doing. Although this one doesn't really have it at this point anymore. It's really not an ABCD structure now. Okay, so dollar, nothing there. Gold I looked at, didn't really tell me anything. I don't see anything here. Just did like a little doji today. No volume. Dollar pulled back. A lot of volume came to the UUP. Pulled back into this big wide price spread bar. It's got the volume, so it looks like it's going to try to hit it again. But I don't know if that tells me anything, because this one's just range trading. So, you know, yesterday we had a decent tell that it was going to try to bounce. I didn't carry overnight exposure. You know, I told folks this morning I was buying early. I bought, actually I bought before the ECB came out. And they came out, we spilled, and then we went right back up, and then it was straight up all day almost. Right, well, it was straight up the first hour, and then it just tailed off and sit there. What's tomorrow? There is no read, right? It's just not clean at all. It could go either way. So that's where I'll leave that thought. Let's see what kind of questions you guys have. And I had one emailed to me. Let me do the one emailed to me first. And it had to do with a uranium mining company, URZ. This company, so they mine uranium. They've had a nice big run up. Okay, so you know we're talking about, you know, $50 stock. So the first thing when I look at something like that is I want to know if they're making any money. So if I go over to the cube and I look at it, and I happened to look at this one earlier, but I'm going to do it with you now. You know, on the cube, there's a few things to always notice. A is how extended is it, right? Well, it's reasonably extended. Let me get rid of that. It's reasonably extended, right? So we have, you know, we have a 80 here. Now we just turned bullish, which is good, and then we're sideways out there. And sector-wise, it's bearish now. So, but everything's bearish now. So that doesn't tell us much more, but it does tell us it's extended on a short-term time frame. If I pull down here, you know, I want to know, do they make any money? And they make no money, and they have no revenue growth because they make no money. So that's a problem, right? And the beta is very high. Okay, so those are the main things. You got earnings coming out on 3/24. Okay, so given all of that, and the reason I go to look and see, okay, are they making money or not, is because if they're not making money in an environment, you know, let's assume that the market continues to do bad. They only have like 7 million on their books, is what I think I just saw. And 7 million, their run rate, you know, if you go back to it, I don't think I have those here. Market cap. Yeah, but I went and looked it up. Their run rate's about 7 million. I mean, they've got 7 million, and their run rate's about 23 million, I think. You know, so they've got enough cash to last half a year. They do have a mine that's just coming on, but it's going to take a while to make some money off of that thing. So there's some danger they might not be able to get their funding, or when they go get their funding, they're going to get it in a bad way. Or they do a secondary, which of course depreciates the stock as well. So all of those things are negatives if the environment is bad, which it could be. So that's the thing you got to watch out for. On the weekly here, you're testing all the swing point highs. You actually broke this one. This one was 161. You closed at 156. So you got one more to go. Pulls back. Volume's not that heavy. This all looks good. On the weekly, and if I go back to the daily, 171. So it left volume at the top. That's good as well. So here's my thought, and actually it came right into the resistance today and got hung. You got, you know, actually the TA today charts have drawn it out well. You really do have the resistance zone there. the one right here that it's playing with, right? And this is actually the way where you'd want to buy it. So I mean, they're all lined up perfectly in terms of, you know, where things are. I don't see anything different. So if I'm trying to buy it, I would try to buy it back down in here, and I'd be patient and wait on it, because you did push down with some volume here comparatively. Now you're coming back up. You don't have much volume into what you're coming into. There's a good chance it fails here, and if it doesn't, there's a very good chance it fails there. Weeklies look good. The market just needs to get healthy, though, to help this thing out. The real risk on this stock is down here with all these swing points. You got 3 of them down here. If this thing breaks this area, it's kind of curtains again. So I would, you know, I would try to buy here. I wouldn't let it get below this, you know, these swing points. And if I were trading it, I'd probably range trade it between this area here. So I'd buy in here, sell a little bit at there, buy some here, sell it there, as long as it continues to be bullish. Okay, let me see what else we got over here. So that's that one. Do you think that SH will trade lower than the 130 bar? So the SH is this 1-to-1 inverse of the S&P 500. The 130 bar. So this bar. I'm not sure why you're looking at that bar. Yeah, I don't think it's going to get to that bar. I mean, you got, again, this is the opposite of the SPY. The SPY has that big resistance we just talked about on those 2 wide price spread bars to the downside. Well, this one has 2 wide price spread bars to the upside because it's the inverse. And so this area right here, right, this is the key area. You know, if it trades back over this area, you know, or back under it, I should say, if it gets back down here, well, it's a different story, right? It's not bearish anymore. But right now, that's the area. To get back underneath there is going to be difficult. So no, I don't think it'd get to the bottom of that bar. Okay. All right, I'm about out of time here. So, you know, it all comes down to the employment number. It's always fascinating to see how markets line up. It's almost as if, you know, there's always a lot of news, right? But it's almost as if the big numbers, you get right up to a critical point and then you're just kind of hanging there, right? Now sometimes there's clues that tell you which way it's probably going to break, but tonight there really isn't. And so there's just not anything out there to tell us which way to break. So hopefully you're reasonably flat. If you think about it from a longer term perspective, right? The short term perspective is short, right? So it's been, oops, wrong one. It has been, you know, the direction has been this way short term. But longer term, right, that is not the direction. The direction on the longer term, you know, has been strong, right? Clearly strong. So if you're trading on an intermediate term time frame, you know, this is just a pullback. It's a blip. It's just like you've seen pullbacks before. You know, and I'm sure right now a lot of the pressure today was shorts covering and new longs coming in on the anticipation that this thing's going to hold and do the same thing it's done before and just rocket on back up. Now that may be the case and it may not. Tomorrow we'll get a good clue. If it gets over that big resistance zone, that will tell us something. But right now we don't know that. So if you're trading in the short term, you got to be thinking down still. But if you're still holding longs, right, you know, or you're trading with a longer term time frame, intermediate or long, you still got to be net long. You can't be net short here. Not coming into a number like this and not with what we've seen so far. All right. I'm going to leave it at that. Thanks a lot again. As always, tell a friend, tell two. I'm L.A. Little. This is and was your daily TA wrap. Have yourself a great night. We're going to have a big day tomorrow. Take care. I'll see you then. Actually, I'll see you Sunday. Good night, folks.